Welcome! The Daily Exchange, guys, we're back here. We're talking about why is everyone buying SNX tokens. We're here with Kain Warwick from Synthetix. He's going to tell us everything there is to know about this, the ins, the outs, the upside downs, and we'll see you guys right after this. All right, guys, welcome back here. We're here at the Daily Exchange. I'm joined by Kain Warwick from Synthetix. How's it going, man?
Thanks for having me back.
Welcome back.
Yeah, it's great.
It's great to have you here.
Yeah,
Man,
thank you.
SNX, it's exploding right now. It's incredible.
It's doing really well, yeah.
I'm really proud, and the whole community as well is right behind you, man.
Thank you.
And thank you for coming onto the show.
Absolutely.
Let's start. Obviously, it's just this, this incredible story, and I just wanted to talk high level about a couple of things in terms of Synthetix. Maybe we'll just start. Do you want to tell us about the platform and what is Synthetix?
Sure. So Synthetix is a synthetic asset issuance platform. So built on Ethereum, essentially allows us to issue tokens that track the prices of any asset. As long as there's a price feed, so it could be commodities, fiat currencies, equities, basically anything that you can track a price of, we can build a token that will give you exposure to that price.
Okay. So I think just to give everyone as well, there's a history behind this. I think it's important is that you were involved with Haven as well,
Yep.
which was a lot about stable coins. And I think we had a show on this, and guys, do click on that link and check that out as well. That'll give you the history. And now some of the new, this is obviously the new platform and what it's really evolved into. Can you tell us a bit of the history behind it?
Yeah, so I mean, Haven was solving a similar problem, right? It was just building a single synthetic asset, a synthetic US dollar, right? And the purpose of that was to enable transactions, payments, etc., in a way that was kind of separate from the banking system, the traditional financial infrastructure. And what we found is that, throughout 2018, after we launched, there were a lot of fiat-backed stablecoins that started to emerge, regulated stablecoins, so USDC, Paxos, etc. And we kind of realized that we needed to differentiate ourselves. Mm-hmm. So we thought, okay, this platform supports more than just synthetic US dollars. Mm-hmm. What if we did synthetic Bitcoin, synthetic Apple shares, synthetic gold, etc. Yes. And that's what we've done. And so, we've taken kind of the initial Haven model and just expanded the scope of it.
Brilliant. Now let's talk a bit about the SNX token specifically as it relates to, and we're going to go through the dashboard and the minting process of how you create these assets, but let's just talk about the token and keeping that separate. And just, can you explain everyone how, what is this actual function of the SNX token?
Yeah, so, if you go back to ancient history, 2016, 2017, there was this idea that we were going to have these tokens which would form kind of the basis of these ecosystems, right? They would enable payments within an ecosystem, et cetera. And I think that a lot of those tokens didn't really do a great job of capturing value. And so that's something that we've tried to build into the SNX token to ensure that it actually was critical to the functioning of the system. So the SNX token is the token that is the collateral for all these synthetic assets. So when you issue a synthetic gold token, what backs that is the SNX token. And the way that works is SNX tokens give you the right to all of the transaction fees that happen in the network. Right? So all of us collectively have these SNX tokens, we lock them, and we mint synthetic assets, which other people trade, they exchange, they do all this stuff. They pay fees for doing that activity, and the fees go to the people who provided the collateral. So it's kind of this fully self-contained ecosystem where the SNX token is critical to the functioning.
Yep, makes sense. And I guess obviously, are you seeing so obviously it's, you hold this SNX token, you stake it, and then say someone trades a gold token for an Apple share.
Yep.
Then a small portion of that goes as a transaction fee.
That's right.
And then that gets distributed out. We're going to have a look at the dashboard here because I think there is there not?
Yeah, if you go down a little bit further, you can see the total exchange volume and fees that have been generated.
Right. So we've got currently 560 million of exchange that's taken place.
That's right.
And we've got 2.1 million in total fees generated. So
Yes.
for holding SNX, these are the fees that is this what they share in?
Correct. Yeah. So all the SNX holders, proportional to how much they've staked, get to share those fees. So over the last year almost, that's how many fees have been paid out. Essentially, that's the value of fees.
Now, tell us about the proportion of people who are staking SNX and I guess minting assets as well. Like, tell us about the type of token holders that you've seen.
Yeah, so I guess, again, to go back to, kind of the early days of token issuance on Ethereum, there was this idea that if you minted a fixed supply of tokens, right, they would be scarce and that people would want them, and that would create this kind of feedback loop of people having demand for the token and using it. Unfortunately, what we found is that has turned out to not be that accurate. And so what we realized is that when we launched this platform, not many people were staking. It was less than 10% of the token holders were actually participating. And so what we realized is that you need something to get the flywheel going. You've got to bootstrap it. And so what we did is we changed the monetary policy to say that if you stake, you'll be paid inflation. So we changed the token from a fixed supply token to an inflationary token. And we said, okay, right now there's not much activity, so we'll actually get the protocol to pay you for doing this thing. And so we went from less than 10% of people staking to over 80% of people staking over the course of like 3 months. Wow. And it's one of the highest staking rates of any token out there.
Right, and just looking at that there, you've got currently on the market, 82.97% is staked.
That's right.
Right, which is a very high number.
Super high, yeah. Most people don't participate in token ecosystems. They just hold the token and sit there. What we've done by creating this high inflation rate is force people to engage. Which is similar to Bitcoin in the early days, right? People were paid to learn how to mine Bitcoin, how to, essentially keep the network going in Bitcoin. And it created this feedback loop of, okay, well, I'm going to take the 2 or 3 days to understand how to, build a mining rig and do all that stuff. And if the protocol can pay people to learn about it, then it's quite a powerful feedback loop.
And tell us about now, I guess we've got this, you can see the exchange volume there, 12.5 million in the last 24 hours.
That's right.
So that's within the Synthetix ecosystem.
Yep.
Being traded and different assets. Can you tell us about I guess some of the assets that are being traded? Can you tell us what I guess the community about some of that?
Yeah. So one of the advantages of a platform like this is it's peer to contract. So you guys might have talked about things like Uniswap, some of the other peer to contract systems that are out there. And what that means is that someone can turn up and trade with the contract itself. We don't have counterparties. So you don't need to wait for me to want to buy the synthetic gold that you're selling, right? You can turn up with the contract and say, what's the current Bitcoin to gold ratio, and get a quote and convert all of your Bitcoin into synthetic gold, right? And that has a significant advantage in terms of bootstrapping liquidity, because everyone is just trading against this contract. So it's always available. Liquidity is always there. And so bots are trading. We've got a lot of individual people trading. The vast majority of the people who are trading are SNX stakers. So it's still a very small community, right? But I think what we've demonstrated by the volume that we're generating is that this network can scale, orders of magnitude past where it is now, just because of the way that the liquidity is structured, essentially.
Yeah. Can you unpack that a little bit more for us, I guess? So we're going to talk a little bit about, I guess, the actual platform itself.
Yeah.
Can you explain to us, that there's this idea I think is very unique in that there's infinite liquidity.
That's right.
And can you tell us, how does that work?
So essentially, you're not trading, right? It's not exactly a trading platform. What you're doing is you're taking debt that's been issued and you're repricing it. So if you have somehow acquired debt in this system, right? You've acquired, USD denominated debt, and you've got $10,000 worth of SUSD, you can turn up to the contract and say, how many synthetic Bitcoin will I get for this? And the contract will say, you'll get 1.1 or whatever, right? And you can convert all of that at the spot rate. So there's no slippage, there's no, you don't have to wait for someone to turn up and reprice that, et cetera. And so your $10,000 order, you could turn up the next day with $50,000 or $100,000. And right now the only constraint is the total debt pool, which is about $10-12 million. So someone could theoretically acquire all of that debt, and they could do a single $12 million order for Bitcoin into gold.
Wow.
So, within the constraints of the system, there's infinite liquidity. If you've got debt, you can reprice it. That's one of the kind of most powerful aspects of the system.
Yeah, absolutely incredible. And this is a new mechanic. Where did this mechanic come from? Is this from part of your Haven experience?
Yeah,
or tell us about the history of it.
It comes from Haven. I mean, the closest, I guess, analogy in the real financial world, if you will, right, is a clearinghouse. So, there's plenty of places where you can turn up to a clearinghouse and they will take the other side of the trade for you, and then they'll go and match it after the fact, right? And so you can basically trade, with a huge bank, for example, right? And your order is always going to be smaller than what they can absorb, right? So you can just kind of turn up and say, I've got, $20 million worth of this bond to sell. And they'll go, yep, no problem. And then they'll find a buyer on the other side. What we've done is said, rather than have an entity that's sitting there taking the other side of all these trades, we will get a distributed group of people and allow them to pool all of their capital and act as that clearinghouse. So anyone can turn up and we'll clear those trades and they take the other side. All of the SNX holders take the other side of the trade.
And with the, obviously with every system, and I just got to ask this because maybe this is where I'm, I think there might be a question I think everyone's thinking is, so if someone makes a gain or a loss, and most systems are zero sum,
Yep.
How does that work out?
Yeah, so it's still zero sum. It's just that the other side of the trade is this pooled group of people that are, providing the capital, right? They're providing the collateral. And so if someone goes and, converts into Bitcoin and Bitcoin goes 2x and then they convert back into US dollars, they will have twice as many US dollars. So the debt will have, their part of the debt will have doubled, right? And the debt is absorbed by all the SNX holders. So everyone's debt goes up, just slightly for that trade, right? And so the idea is that eventually what we want is for all of those trades that are happening, all the different positions that people are taking, to be market neutral. So, like you have in a futures market or a derivatives market, there'll be people that will be rebalancing, there'll be market makers, there'll be, fees paid to either side of the market to keep it neutral. And then there's the other component, which is the SNX holders can actually hedge their exposure outside of the market as well.
Wow.
So, yeah.
And that's another market as well being developed.
Yeah, on the other side of the trade, yeah.
What are you seeing sort of bots doing within the system?
So over the last 6 months, we've had a lot of front-running activity, which is a huge issue in DEXs. Because all the transactions on Ethereum are broadcast, they're open, they're transparent, people can essentially build a bot that will read those transactions as they're broadcast and try to get in front of them. And so this has been a huge issue in DEXs, since DEXs have existed. With us, it's something that, we've had to come up with, I guess, a few different solutions to. And at the moment, what we've got is kind of a speed bump. So we basically say, as the price is being updated on chain, you can't trade, right? And we'll limit how quickly you can broadcast your transaction. So, without going too deep into the weeds of how Ethereum transactions work, we essentially just slow you down to let our price update happen before. But, bots obviously keep trying. They're trying to make a profit, and so they keep trading and trying to front run. And so it's this kind of arms race of improving as they kind of catch up to us. So.
Fascinating.
Yeah, it's very, very interesting. But obviously, it's somewhat of a distraction from us building the core platform, but crypto is very adversarial. If you put money out there, people will try and take it. So.
Yeah, of course. Now, I guess there's other shares and commodities. What's some of the most interesting things you've seen traded so far?
So, we've got, I guess, things that are typical, so long, short exposure to crypto, right? We've got commodities, but there's other commodities out there on Ethereum, other, gold tracking assets, et cetera. Where we've got, I think, some unique asset is in the indexes. So we've got a centralized exchange index, and an inverse index as well. So if you're bullish on, BNB, KuCoin, Leo, etc., you can basically take this entire index as a single token on Ethereum and have price exposure to all of those assets, which is hard otherwise, right? Because if you think about, centralized exchanges, Leo doesn't trade everywhere, BNB doesn't trade everywhere. They're on different chains, they're in different places. So it's not easy for a person to kind of keep a basket of those tokens. So this is just single token that represents that whole kind of ecosystem.
In terms of assets, what things can be synthesized and what things cannot?
So, fundamentally anything with a price feed. If there's a price feed that we can bring on chain, we can, create a synthetic asset. But then there's sort of practical challenges, right? If it's an illiquid asset that rarely trades and the price feed updates, once a year, then we really can't, create a synthetic asset for that because, it creates risk for the SNX holders. So it has to be somewhat liquid, pretty good price discovery, so the large cap crypto assets are good examples, right? So things like that, commodities, obviously, equities, indices, anything with a robust market, we can synthesize.
So tell us about, what is, for traders and obviously people, investors trying to take positions, what is the main benefit of Synthetix? So I guess versus, exchanges and share trading platforms and things like that.
Totally. So, obviously there's things out there like, BitMex. Right? BitMex is a custodial solution. It's got a lot of liquidity. So if you want to take leveraged positions in Bitcoin, it's one of the best places you can go. BitMex, Deribit, et cetera. As we grow, we will essentially be able to create a non-custodial version of that. Right? A highly liquid place where you can take leveraged positions, both long and short, on Bitcoin without having to actually hand over custody of your assets. Wow. And that, is ultimately the dream of crypto, right? Is being non-custodial and everyone having control of their own assets. And so, if we can replicate what you see on centralized exchanges in a, sort of permissionless, trustless fashion, that will be a huge advantage for traders.
And I guess one of the other things is, you can move very easily from, there are new things being paired like gold or Bitcoin and Tesla shares.
Totally.
And being able to move seamlessly between those. Yeah. Are you seeing some of these, these, I guess, is that I guess very creative trades or new trades that never existed?
Exactly. Yeah.
Where do you see that going?
So we just completed a hackathon with Kyber. So you probably know Kyber, the exchange, and other DEX that we've got a pretty good relationship with. And one of the wallets called DEX Wallet built a really cool solution which allows you to take DAI, right, which is another stablecoin. The interest that you earn in that DAI is automatically converted into these different recipes, right? So you stake DAI, you get interest. The interest is converted into synthetic assets that you can take a long ETH exposure, short Bitcoin exposure. Right?
Wow.
And all of this happens just in the background. You just click one button in the wallet, you don't do anything, and it's just all automated for you.
Wow.
So that, kind of composability and be able to take all these different components and stitch them together.
Yes.
And, no one talked to Maker about adding DAI to that. No one talked to us. People can just go on chain and build it and connect these contracts.
Wow.
So that permissionlessness, and not needing to ask someone, hey, can I list this or can I do that, is really, really powerful.
Yeah. So you've got, and I think it's really creating programmable derivative contracts essentially.
Yep.
that can be extremely complex.
Absolutely.
And I don't think that's ever been done.
No, certainly not without, inside of a bank or something like that, right? With lots of legal constraints and regulatory constraints around, what those people can do.
Yep.
And, it's obviously all on chain as well. So you can see you've got custody of those assets the entire time. You don't send the DAI to someone and then they send it back to you maybe. Yeah. You lock it in a contract and it just happens, so.
Tell us about the debt pool and how that kind of works for synthetic token holders.
Yeah, so as we discussed, when you take the other side of the trade and someone's profitable, the debt goes up, and conversely it goes down if someone has a poor trade. And so the risk really for SNX holders is that debt pool. They're on the hook for all of that debt collectively, right? And so at the moment, there's a lot of long exposure, as you can imagine. And this goes back to early July, right? So in early July, when ETH was sitting above 300, there were a lot of people long ETH. And it obviously pulled back to like 180. So everyone's debt went down significantly, right? Wow. Which is great if you're an SNX holder, your debt just halved, right? Yeah. But now as ETH has kind of crept back up, Bitcoin's crept back up, the debt's growing, right? So, this is this constant fluctuation, and essentially your role as an SNX holder is to try and keep yourself neutral. So, if you see that there's a lot of BTC exposure, one way to hedge that is to go and take spot BTC outside of the system. So there's a whole bunch of things that you need to do to kind of keep yourself neutral to the debt pool. But the debt pool is the thing that you are responsible for as an SNX holder.
Okay. And what I guess there's some interesting components here. You've got. I'm just looking at. We've got obviously a lot of longs on Bitcoin, a lot of longs on Ethereum.
Yep.
We also, but unusually, have the a short on Maker.
Yeah.
Which is quite fascinating.
Yeah. Yeah.
In and of itself, given this platform and things like that.
Totally.
Maybe there's some internal bias there, but
who knows? Maybe a bit of competitive tension or something. Yeah.
But I'm not sure. Some of these ones, taking unusually Tron is slightly, I guess, short. No, it's actually slightly short there. I guess these coins tend to be hard to. Some of them tend to be hard to short.
Yeah.
Have you seen, I guess people taking, I guess, short and or long positions in relatively obscure tokens? Is there any activity around that area?
So not yet, because most of the tokens are fairly, large cap, right? And that's the kind of liquidity preference. As we go further down, we probably can't list something in 500 range or something like that, just because it won't have enough liquidity and not enough price feeds for the kind of security of the system. But there's plenty of things that you can't short on Deribit or BitMex or OKEx, right?
Yep.
So Maker is a good example, right? There's no place really where you can short Maker,
right?
Unless you sell it into the spot market or whatever, right? Borrow it from Compound or something, So having a kind of instantaneous short exposure. That said, one of the very strong constraints on the growth of this right now is it's not a perfect short. It's more like an inverse ETF. Right, so they're inverse tokens rather than a perfect short. So you get kind of exposure to the price going down, but not perfect one-to-one.
Okay.
And so in this early iteration of the platform, it's not a perfect asset for shorting. Okay. As we develop some of the new functionality like synthetic positions, which is coming up probably later in the year or early next year, you'll be able to actually open up a short contract like you would in a futures market like BitMex.
Wow.
Yeah, and it'll be a synthetic position, essentially.
Okay. And can you leverage that?
Yes. Yeah, you'll be able to take a leveraged short position on any one of the assets we list.
Okay.
Yeah.
Let's move on and talk a bit about governance now.
Yes.
Now, governance has been quite a hot topic I guess in the DeFi space particularly as well. There's been some, we're just talking a little bit about MakerDAO. There's been some news around this. There's a tweet here according to Daniel Onghungao, a software engineer at Binance. He says, wow, the MakerDAO stability fee interest rate has dropped to 5.5%. A single whale with 97% of the voting power made the decision, went from 2,489 votes a few hours ago to 44,539 votes. That's a lot of movement.
Yep.
And obviously, being, I guess, somewhat democratic, it makes it a little bit volatile to some extent.
Yep.
How are you approaching governance with Synthetix?
So, on-chain voting is a challenge, right? There's huge issues with it. We actually saw it with Aragon in the recent AGP as well, where one of the founders swung a vote to build their own chain. Which basically means leaving Ethereum. So a lot of the core stakeholders that are token holders don't want Aragon to leave Ethereum, but the core team does, and so you've got this schism that's and they've got enough tokens, and there's low enough participation in governance that a single person can swing the vote. And not only did they swing it, but they actually announced ahead of time that they were planning to vote for this thing, which kind of creates this chilling effect of, well, why am I wasting my 5,000 tokens, right? When someone's going to drop 3 million tokens on me, and what's the point, right? People struggle, I think, at the best of times in large democracies thinking that their one person, one vote will count, right? But if you've got people running around that have one person, 3 million votes, it's even worse, right? So we've made a sort of conscious decision not to employ on-chain voting for our governance. We use rough consensus, which is closer to the Ethereum governance model. It has its own issues, and even as recently as this week, we've got an upcoming release of a DeFi index token. And as we were getting closer, there was a little bit of contentiousness around what should be in it, what the weighting should be.
Yes.
We decided to pull it from the release because we couldn't get consensus. Now, if we'd had an on-chain vote, something would have won, right? And the foundation could have just gone, no, we're going to do this. But it creates, again, this chilling effect of, well, why am I participating in this
Yeah.
network, right? So
Yep.
it's really important, I think, for legitimacy to give everyone a voice and to not just say, well, the people with the most tokens are going to win.
And how are you seeing, I guess, people who are holding the tokens, what is their sort of drive or push from a governance perspective?
I mean, obviously, everyone wants the network to succeed, right? And we're still in a very nascent stage. There's a lot of things that need to happen. And I think there's trust in the core team and the core community. There's, probably 30 or 40 people that have been around in the core community for the last 2 years,
Yes.
right? That understand the system, understand the risks. We've gone through the debates. We get it. But now as the community grows, there's new people coming in that are like, I've got an idea. And, so you've got to bring those people in and kind of, foster that conversation. But, it can be challenging, right, to kind of manage that. And so I think that, it's just something that we'll sort of see evolve over the next 6 to 12 months as we kind of get closer to, a more open governance framework.
Okay. All right. So it's plans sort of for the future there for changes. Let's talk about DeFi now.
Yep.
Because I think it's a big thing.
It is.
And we've seen some incredible. We're looking at there's sort of Nexo, there's Compound.finance. There's some interesting platforms that are out there. You can say Uniswap to some extent.
Yep. DYDX.
Yep. And these platforms offering interest. And there's quite interesting ecosystems that are around these. I think and then I think stablecoins to some extent and synthetic stablecoins as well are sort of very much part of that. Do you see yourself? I guess do you see Synthetix as part of the DeFi area?
Definitely, yeah. I think that the DeFi meme, if you will, was actually started by Set Protocol and Dharma, two of the team members there, and I think it's been very powerful because if you go back to, this was kind of late 2018 that this meme arose. And if you go back to mid 2018, before DevCon that year, we had all these different projects that were all really working on decentralized finance, but there was no way to kind of bring them all under one umbrella, right? And obviously there's differences and what have you, but having a single thread that could kind of tie these different projects together and get them to work together. So at DevCon, they had a DeFi conference, essentially, right? A one-day conference. A lot of the DeFi projects went there. We were there. And it just became obvious in hindsight, like we're all working on the same thing. We're working on trying to open up these, financial opportunities to anyone and not have this permissioned finance system, dictate what people can and can't do. And so I think that that's been really powerful. It's grown, and it's one of the best use cases on Ethereum right now.
Yeah. In DeFi right now, there's all these things, I guess, called oracles, which are, I guess, bringing off-chain data to some extent into on-chain. Now, I guess, for example, say bringing the US dollar in a forex price compared to the euro or whatever it may be.
Yep.
Now, I guess we've got one of the one called Chainlink, which has been quite successful. How does in Synthetix operate with this off-chain data? How does that sort of work?
So when we launched back in March of 2018, there were no Oracle solutions. It was basically roll your own, which is dangerous, and we've been caught out by it. So we had an Oracle outage 3 or 4 months ago that was a pretty devastating outage. We're able to recover from it, but the Oracle problem is kind of an existential threat to every DeFi protocol that uses them. Not everyone uses them, so Uniswap uses a different model, doesn't need to bring prices outside. It basically takes the price of the assets in a single contract and uses that to determine what the price is. But without an Oracle, DeFi is fairly limited. And so, Chainlink is looking to kind of build this distributed Oracle system, and we're currently in testing with them and hopefully looking to go live later in the year. And what it does is allow people to sort of specialize on oracles, which is a really hard problem. And Chainlink is a team of very very creative and clever people, and that's all they're focused on. They're not worried about all the other aspects. They're not worried about different elements of DeFi. They're just focused on solving this one problem. And so it allows us to say, okay, you guys specialize in that, focus on that, and we'll deal with our own issues. And it creates another advantage, which is that we can then open up asset creation to the community. So at the moment, if we want a new price, we need to bring the price feed in ourselves, and we're responsible for it. With Chainlink, we'll be able to basically have the community go to the Chainlink community and say, hey, we need a new price feed for Brent crude. And that community will say, we can provide it. And they'll put it together and they'll put it on chain, and then the two communities will use that to create a new asset. So that will really open up and make it a much more permissionless process.
Brilliant. That's incredible. Now, in terms of the token itself, obviously, it's quite a hot token right now, I guess, and a lot of people are joining this. Where do you think it'll go from here? Obviously, there's a lot of people that are creating new assets. There's people staking this as an investment.
Yep.
Where do you see the token going from here?
I mean, I think that when you look at the staking rate that we have, it creates an environment where people have to be engaged. They have to understand the token. And I think that when you've got a highly engaged community, and you've got, for better or worse, crypto people like complex things, right? And so when you build this complex problem, people get really into it, right? And they really go down the rabbit hole. And so I think that means that we end up with a very, very engaged community. And so we have an environment where we've got one of the lowest floats on exchanges, because people are using the token. Yes. It's not just sitting on exchanges waiting to be traded or whatever, and so that creates an environment where, as we solve some of the critical problems, and there's still a lot of problems in the project that need to be solved, where maybe 10% of the way in, people sort of see the potential of the project, and they kind of get it. So, we've got very strong believers in a very rabid community. We're lucky to have them. And yeah, that's kind of the focus, I guess, is to continue to build out the community and bring new people in and scale the system out.
And what I guess coming up, tell us about the roadmap from here. What are some of the things that people should look out for?
So Oracle's is a huge issue right now. It's this centralized point of failure. Moving to Chainlink is going to be a huge step in the right direction for the project, just to make it less, to reduce the risk significantly. So that's a huge thing. Hopefully, towards the end of the year, we'll switch over to Chainlink Oracles. Another thing is synthetic positions. So we currently have this kind of spot market, pseudo spot market, and ultimately people want different order types. They want limit orders, they want stop losses, they want all these different things that we can't support in the current iteration. And so as we develop that, and we've got a product that genuinely competes with a BitMex or Deribit or Binance futures or whatever, I think that'll be a step change as well. So those are two of the probably biggest things coming up.
Incredible.
Yeah.
I guess what else do you think is from our viewers and obviously token holders and people who are potentially thinking of getting involved? What sort of things else do you think is interesting, or where do you see the future going, I guess?
So, one of the biggest criticisms, I think, of the project is that we use SNX as collateral, right? And so there's an argument that having a token other than Ether as collateral within the Ethereum ecosystem doesn't make sense. Ethereum is the most liquid asset, second most liquid asset, in all of cryptocurrency. By far the most liquid asset in the Ethereum ecosystem. Why would you use something else, right? And we've got a number of different reasons why we've done that, but we've kind of taken that feedback and we believe that there is an opportunity to bring some of the Ethereum liquidity and stability that you have in that asset into the ecosystem. And so we're looking at rolling out like Ether collateral, essentially. So you would be able to turn up with your Ether, lock that, and issue synthetic assets and trade those synthetic assets alongside the rest of the pool, which just opens up a huge group of people that may not use the platform because they don't want to hold SNX.
Wow.
Yeah.
That's a whole other new community you're adding in there.
Definitely.
And you've been a big advocate in and participant in the Ethereum community as well for a long time.
Yeah.
And obviously bringing that in, do you think that's something which I think they would want to, that they're keen to adopt, is the Ethereum?
Yeah, I mean, there's this norm, and I think it's important to make the distinction. We're not doing it just as a sort of popularity contest type thing. We think that there is genuine utility in having people be able to instantly trade on the platform coming from ETH and not have to go through another token. There's a lot of value there, but definitely from an ideological perspective, I think Ethereum people want ETH to be used as much as possible. And so having a really core use within the system for Ether is, I'm an Ether holder, right? So, that's valuable for me.
Yeah.
I think it's important for Ethereum, for Ether to be used and to be kind of built into these ecosystems. And when you look at DeFi, one of the core metrics is ETH locked in DeFi. How much Ether is actually locked up in Maker, in Compound, in DYDX, and all these different things. And so I think that that's something that, ETH locked in the SNX ecosystem will be a good signal that, we're participating in the ecosystem in the right way and leveraging Ether. It doesn't make sense to build on Ethereum and not leverage that, to get the most uses possible.
I guess changing topics. I guess in terms of compliance. Yeah, I'm just trying to understand. You've got currencies, commodities, crypto, stocks, indexes. Where do you sort of see this in the regulatory? I guess how do you view Synthetix from a regulatory perspective?
So it's an interesting model, right? That really doesn't fall under a obvious regulated framework because we're not providing a trading venue. There's no entity that's operating this network. It's token holders that contribute to it. And probably the most important thing when you look at some of the cases recently, like Ether Delta, et cetera, there was a single entity that was capturing fees. They're operating that network as a for-profit enterprise. So in this case, SNX holders are paid fees based on their contribution. But there's no centralized sort of participant that's capturing all the value.
Yeah.
Right? And obviously a lot of crypto is still gray because it's unclear where regulators will sort of land. But we're doing everything we can to make sure that we're not kind of stepping across any bright lines. And right now, we've been able to manage that, I think.
Yeah.
But the other component is obviously the more decentralized the network is, the safer it is.
Yes.
So when you look at the SEC's view on Ethereum, it's decentralized enough that it is no longer really regulatable, right? And so if you get to a point where your network evolves such that it's now truly governed by the token holders and managed by the token holders and driven by the token holders, and we're not quite there yet, but we're definitely getting closer. As you cross that point, you become this distributed network that just exists, and there's no single person you can point to and say, don't do this or do this. So that's an important phase for the project, I guess, over the next 6 months.
Brilliant, yeah. Decentralizing it in order to, it's so decentralized that I guess it's not one single entity; it's a whole group of people.
That's right.
Which is fascinating. I guess that was my last question, but there is one more. Final one, which I always ask everyone.
Well, I think last time I said like something stupid, 12K or something like that, and it was like $3,000. So I wouldn't trust. Don't put much stock in my answer here, but yeah.
Second time around, what is the price? I guess New Year's Eve, 12 o'clock, 2019, of Bitcoin. I do believe. Yes, you have. This is your second one.
My
Kain.
second chance. Yeah.
But here we are, and we're in a very interesting. I don't know if you have a lot of views on the market as well.
Yeah.
I don't know if you want to contribute some of those as well. This is not financial advice, but I do
Not
think
at all.
you are a long time cryptocurrency, I guess trader, participant, investor, builder.
Yep.
And I guess everyone values your contribution as well to this community. So thank you as well
Sure, thanks,
for that. But wanted to maybe talk a little bit about that.
Yeah, so I think my sense is it feels very much like 2016 again. And 2016 people look back, scaled out, looking at a linear chart, and they see this like straight line almost, growth, right? That's not what it was like. There were multiple months where there were 50% corrections, right? And so when you look at 14K down to 7,700, people freak out, right? That's a lot of money, $7,000 per Bitcoin that it dropped, right? But back in the day when it was 500 down to 250 or whatever, which happened multiple times through that 2014 to 2017 kind of bear and bull market. That's expected. That's what you expect to happen, right? In a bull market, it doesn't sort of invalidate the overall directionality. And so I think what we're observing is, most times on the dips, people are buying it up, right? And if you see that there's buyers out there with cash sitting on the sidelines waiting to soak up any sells, that's a pretty good indication that you're in a bull market. So my sense is that, it's hard to get the timing right on this, but it definitely feels like we're not in 2017 yet. We're still in the early phase. There's some jitters. People are, still a little bit sensitive about, the last couple of years, but I think we're going in the right direction. And so, I'll say 15K. It may turn out to be a little bit early. We might not get there, but we've got another 6 weeks and things can go pretty quickly. So we'll say 15K and see where we land.
Yeah, and we've got this halving coming up next year. There's a lot of
Absolutely.
And I do think there's a real kind of a resurgence or a relook at Bitcoin in and of itself.
100%.
All around the world.
Yep.
Once again.
People start paying attention to it again, right? And so I think that attention kind of will grow and people will get interested again. And as the price slowly climbs, which is what happened in 2016 and early 2017, and then you get to a point where you get kind of the late majority coming in and going, wait, what's going on here, right? So it's still very early in the cycle, I think, but we're going in the right direction. So
okay,
yeah.
Kain, thanks so much for joining us on the Daily Exchange, guys. We've got Kain's Twitter profile down here. Check out the website. You've seen the dashboard there. There's the new beta of the minting program coming out as well, which is incredible.
Yep.
And this will probably be going live fairly soon.
On Friday.
Yep. So check that out, guys. It's an incredible system. And obviously do subscribe, guys. Do join us again. And thanks very much, Kain, for joining us.
Thanks for having me.
All right. We'll see you guys later. Yeah.